what's the dominant driver and what's the dominant premium in gold? Is it still geopolitics? Does macro matter? Um, yeah, what is sort of, how do you corroborate the fact that white metals are also rallying in a potentially risk-off environment around in geopolitics?
Well, I'm happy to pick up the start there. I don't think gold does need a perma crisis. I know we've had a succession of drama and political theatre, but I don't think it needs perma crisis for to drive the market forward. I think there's something more fundamental going on. I don't think a $5,000 price is a market reflection of where the market's at. It's a vote of no confidence in a system which I think many people perceive as failing them, and that's the broader confidence in the dollar, payment systems, and so on. But fundamentally, if there's one single thing that I would point to, and it could actually also be the thing that unpicks the gold market, in one word, it would be debt. Global debt is out of control.
Right.
US GDP, debt to GDP at 120%, $30 trillion in debt in the US. Six of the seven G7 countries by the end of this decade could be in a situation where their debt repayments outpace their growth, which puts them in a critical situation. So I think it's debt which is underpinning this. And if you like, everything else that we're seeing is a manifestation of that in a different form.
Yeah, I'd like to add to that. I think you're absolutely spot on. It's not just the United States that's running wild with the debt issuance at that $38 trillion, growing at a rate of 6% plus, well above their real GDP growth. But I think, other countries as well. And with defense spending now moving towards 5% across NATO, we're going to see a lot more debt being issued down the road. And the problem here is you have Washington directly challenging the independence of the Federal Reserve. In essence, we'll see pressure where real bond yields may be significantly below any future inflation. At this point, it doesn't seem like they're overly enthused about the 2% target. And if that's the case, then real returns on bonds, maybe gilts and others, is going to be, a purchasing power losing definition. So I would say fundamentally, this is not a US dollar debasement trade. This is fiat currency debasement trade where people are hedging. And why is gold an alternative? Well, it's a real asset, nobody's liability, and it reflects real costs of production. Labor responds to inflation, so do capital goods, and almost by definition, it embeds inflation in its cost structure. And, to add to it all, the grade levels, the quality is much lower as we move forward. That implies that not only are you going to get a return to inflation, but then you're going to get some extra, as we're going to use more of those expensive resources to mine this stuff. So we'll see ebbs and flows, but I think gold has a great future down the road.
Before we jump on, Nikki, just to carry on that same argument, and I think if you wanted evidence that the system is breaking, look at Bitcoin, which is, if you like, is digital trust, which is falling, and gold, which is analog trust, a real hard asset, which is increasing. It underlines the fact that the debasement trade is real.
Yeah. No, the debasement trade has certainly been trending. It's the number one Google search term. So, you can argue that perhaps on a tactical basis, it's a little over frothy because it's turned precious metals into a bit of a meme stock. But Joni, I want to come back to you because you're plugged in with regional flows. We talk about the Sell America theme. There's been a Sell Japan theme, right? Going back to debasement, the questioning of US debt, JGB bonds, what's happening in the yen, intervention on fiat currency. Has that played out in terms of any interesting flows, gold, silver, even PGMs on a regional basis in Asia, given what's happening, what's happened with Japan recently and the fiscal fears?
I think these events have been much too recent, right? And everything's happening so fast. But the general trend, I would say, and going back to your question, tying it in with your question earlier as well, I think the broader theme really is diversification, right? In this environment where there's just a lot of uncertainty and particularly political uncertainty, there is a general sense that people want to have as diversified a portfolio as possible. And for all the reasons that were mentioned by Ross and Bart, gold is sort of an obvious option for investors, be it institutional or retail, and I think that's spilling over to the rest of precious metals as well, silver, PGMs, as being those hard assets that people can hold. What a lot of these types of positions have been expressed through physical form rather than kind of paper gold or kind of leverage positions. So that is what's interesting. And so far this year, physical demand has been quite strong out of the region. Not necessarily surprising if we're thinking a bit from a seasonality standpoint, but given how high gold prices are, that does surprise a little bit that, physical demand, retail demand remains very strong at these price levels.
Yeah, and I think, the fact that you're buying gold, but also physical gold goes back to what Bart was saying earlier about just concerns and just outright sort of fear around the monetary system. You mentioned positioning, and I think it's a really important point because it's going to drive. Well, first, let's unpack. Do we think real assets, but particularly precious metals on aggregate, is the sector overweight, underweight, or neutrally positioned? What levers can we pull to drive the next, let's say, $500 in gold? We know Western institutions are involved, retail's involved, China's involved, central banks involved. Like it's firing on all demand cylinders. So how are you looking at positioning? Where do we go from here?
Why don't I start? I talked to a lot of portfolio managers, and I'm even seeing crypto companies buying a significant amount of gold as well, which is kind of interesting. But what I'm increasingly hearing is that fund managers ranging from pensions and others are looking towards physical commodities, be that gold, silver, PGMs, and copper, as a diversifier, something that will, do what gold is doing, and that has actual uses. Folks are now talking about 25% exposure in commodities, from metals to energy. Well, 25% is rather unreasonable when you look at the hundreds of trillions of dollars of debt out there, hundreds of trillions of dollars of equity valuation. But even if a small percentage of those flows goes into, our market and other physical markets, I think $500 for gold would be a very, very easy ask. It's going to take time, but now, I haven't seen that in my over 25 years of covering these markets, that type of interest from even generalists of how do we diversify our portfolio of, of our traditional 60-40 exposure of equities and bonds. And it's going to be a diversified, it's going to get very, very interesting, I think.
Renee, you certainly are very plugged in with the typical equity investor. So would love to get your read on just what is sentiment positioning from that side of the coin. It seems to be that equity investors aren't fully engaged or aren't fully buying what underlying prices are doing, just given where valuations are. So how do you read the positioning across sort of more generalists or equity investors in the space?
I think the equity investors are like, staring at the screen and saying, why the hell haven't I got more gold? But the fact of the matter is, it's run so hard, and the whole world, to me, is watching that 50-day moving average. And it's never been further. Both gold and silver have never been further from above the 50-day moving average than they are at the moment. And it's 100% going to happen that it's going to revert to the mean. The peloton always wins. It will revert down to, for example, we were talking about silver just now with Ross. It's sitting at 106 of around about dollars an ounce. The 50-day moving average is at 69. An equity fund manager looking at that will take his profits straight away. That's what I'm recommending. It may go up further, but wait until it comes down to the sort of 50-day moving average and then go back in. It's plenty of time. Also, just on something that Bart said, JP Morgan, I think, came out the other day and said instead of the 40% bonds, they're now recommending 20% in gold and 20% in bonds in a general portfolio, which I think is a very good idea in this sort of market.
Right.
So I think everybody's staring, the fund managers staring at the screens and saying, why haven't I got more gold? But, they're working with other people's money. They can't just take gambles.
A bit of an issue though when you've got everyone pointing at the same lifeboat. As a percentage of global assets under management, gold is less than 1%. So how are we going to accommodate that 20%? Not without a considerable recalibration in prices, is the short answer. Yes. We have to get people to give up an awful lot of jewelry and other scrap to get to those sorts of numbers. For sure, at the moment, you were talking about levels of allocation, certainly physical at the moment, and probably Nikki, you can confirm this at MKS, is off the scale. I hear talking to dealers across Europe, UK, Australia, that queues are not uncommon outside dealerships in the mornings. Securing sources of supply is a major problem for a lot of dealers at the moment. So the retail market is certainly very, very busy. It doesn't necessarily move the dial that much. It is a relatively small component of the whole market, but it's reflective, I think. The interesting one, I think, is ETF demand, which of course has come to an all-time high at about 4,100 tons. So that's probably where we're seeing the big difference. Speculative interest, pretty lightweight still. COMEX positions close to a 5-year average, slightly above it now. But I mean, the specs seem to have missed this move pretty well entirely.
So on that point of ETF demand, I want to sort of draw that in with the shortages we're seeing in platinum and in silver. Because in the past, when palladium was trading at 35% lease rates in 2017 and 19, kind of what gave that back then was ETF outflows. The investor became the lender of last resort, right? Now that's been flipped because platinum and silver ETFs are accumulating and they're accentuating the tightness in already deficit tight markets. So what gives? I mean, is this demand destruction? Do we get scrap back? Do we get primary back into either silver, or the two questions are silver and platinum? But I mean, something has to give at these pricing. Joni, what's your interpretation?
I think we have lost her actually.
Oh, yeah. What's everyone's thoughts around where's the supply response and or where's the demand destruction in silver and in platinum at these prices?
Well, silver looks like is going to be in a deficit again. We're estimating something like 70 million ounces or so. But when you bring investment demand into it, that shortfall could be much, much higher. It means that you're operating above the cost curve, which I think on the 100th percentile is like $70 to $80. I think I was on the 98, 99 is about 42, 45. How does this happen? We still have above ground inventory. But the question is going to be, what is the price at which you attract it? And I think you'll see a combination of both. You will see some inventories come in at appropriate.
All right, good afternoon, everyone. You're welcome to the January 2026 edition of the Dukia Gold webinar. Happy New Year. Welcome to another session once again. You're just watching a webinar from the London Bullion Market Association. I know a lot of people are still joining in, so I'll just keep this webinar up while we wait for everyone to join in. Then we kickstart the presentation in earnest. My name is Emmanuel Waka. Happy New Year and welcome to our monthly webinar. Thank you so much.
Price, and I'm not sure we know where that price is at this point. Economists have a nice way of calling it based on marginal revenue product. That essentially means, what profit are you giving up by giving that ounce of silver to somebody else, and demand destruction. I think we're going to be at these prices looking to replace silver for a lot of industrial uses. I don't know, maybe we develop technology for nickel and others, but it is going to happen. After all, these are physical metals, and you can't consume metal that doesn't exist. So either demand drops or you attract inventories. And if there's no inventories, demand by definition has to drop. But that means extremely high prices, well over and above the marginal cost of production. But I think at this point, there's still enough LBMA inventory out there for the next couple of years to provide that. It just, what is the price?
Renee, what's your interpretation in terms of where is the supply response in platinum? Because that's been consistently trading in high sort of at high lease rates, and ETFs are accumulating, accentuating the problem.
Yeah, look, it's not going to happen in platinum. The supply response, unless the price goes very, very high, and you have an enormous amount of money to go to deeper levels. But demand destruction in PGMs is really not that possible, because for platinum, what do? You substitute it with palladium, but the palladium price is right next to the platinum price. Recycling is not happening, even though the autocat basket at the moment is about closer to $3,000 an ounce, if you include rhodium and everything else, and the break-even price is probably around about 2,000. But the problem is you don't have any scrapped cars. Cars are lasting longer and longer, so we don't have any recycling to take care of that. Above ground stocks, sure. There's supposed to be about 3 million ounces of platinum above ground stocks, which have been there for many years, and there are now views in the market that those stocks are gone. So what do? If demand carries on, demand cannot really stop, because of the use, the very specialized use of PGMs, especially in autocats. And with the delay in the EU, on internal combustion engine vehicles being pushed out and pushed out, this is the 4th time now I think it's been pushed out, and I see it's going to be pushed out forever. So demand for autocats is going to carry on for a long time. I might be sounding a little bit too bullish for my own good, but I really can't see where destruction of demand is going to come from.
Yeah, the takeaway for me reading these surveys for out this year is there are only 3 cases. That's bullish, very bullish, or super bullish. There is no, and I guess it feeds into my question about gold, or just what's the micro or macro bear case for gold? Because everyone just has a somewhat of a bullish trajectory. It's just how steep the incline is. Can anyone outline outline for me just a potential macro bear case or micro bear case in which sort of jewelry implodes or investment demand implodes, but for gold?
I think
is there one
on gold? I think you probably need to revisit the Davos speeches and from the US in terms of what their plans are. And my sense is that the only way that they can engineer a reversion in the gold is simply by creating a primary surplus, an indication that the debt's going to be paid down. At the moment, I describe gold as a voting machine, and it's voting no confidence. We're heading towards. We're not yet in a crisis in terms of the debt, but we're certainly in difficulty. If the US can engineer through growth, through cutting rates, in a very dramatic way, they may be able to pull themselves out of the ditch, and by extension, help the rest of the world, the global economy as well. That's an if. And I think that's probably the only thing that I can think of that would see gold coming off considerably, is if they manage to pull it off. At the moment, the gold market's saying they probably can't. All they're going to do is simply spend, but not actually recoup it through growth. So that's probably the bear case for gold, US growth.
Joni, do you talk to your clients about a potential bear case for gold, and how are you looking at that?
Common question I've been for gold, in our view, is similar in terms of strong growth out of the US, and particularly, I guess, if you leading to the outlook for rates changes, then that creates sort of that changes the narrative for gold. But alongside that, I think it would be important that investors gain more confidence in policy, and kind of you remove some of this policy uncertainty, right? I think and to kind of get back to these traditional sort of macro relationships where Fed hiking cycle and going to hurt gold today in the past. But I have to say I haven't spoken to any in a very long time.
Right. I got, certainly if we do get a sort of US economy that's growing at a Chinese style GDP, I think, and you're not getting a sell off in the dollar, and peak uncertainty is behind us, we absolutely could see lower gold pricing for sure. A lot of talk, sort of big picture, like thinking here is, there's with 5,000 plus gold, 100 silver, 3,000 platinum, the market's balance sheet is facing significant constraints. There are negative implications because of the sort of higher for longer price action. Credit, metal, financing limits have basically been breached. How does the industry evolve? What is the risk around consolidation? What are some of the implications to a market dealing with higher for longer pricing regimes and the balance sheet implications around that?
Maybe I'll give it the first shot here. I think what we're seeing is the
trading the FOMC
exposures of various desks has moved higher because of the price, and that is limiting many banks' ability, at least in the short run, to provide leasing, to provide liquidity to the market. I think part of what we're seeing in this tightness on the front end of the curve along these precious metals is in many ways related to that as well, where you've got basically you've brought below all your credit limits, and the market is operating on ounces, not on value per se. And I think that's causing some liquidity issues, which I think have been manifesting from silver to PGMs.
Yeah, we're certainly seeing that. I'm hearing the same thing across Europe. If a dealer has a credit facility based in dollars and the gold price doubles, then the amount of metal that they can hold halves, because it's a dollar-based thing. And so by extension, they're holding less metal. The cost of holding it is rising because liquidity is tight, especially in the white metals. So it's not all sunshine. The market might be moving and very robust, but for a lot of dealers at the moment, sourcing physical supply, because we've got fairly thin pipelines on manufacturing of small denomination bars and coins, is a problem. Their stocks are light, and the cost of holding is higher. So although it sounds good, it's actually providing something of a crisis for some players, despite the fact that they've got queues of people outside the shop and phones ringing off the hook. So it's not all sunshine, that's for sure.
Tony, do you have anything to add, or Renee?
I think it's a very tight market.
Yeah, for me, it's really interesting. Normally, when you do get liquidity constraints in precious metals, which are quote unquote liquidity sponges, it's normally a negative pricing event, not a positive pricing event. But I think it indicates like the pain trade is higher in precious, and it's certainly going to lead to some interesting developments.
Yeah.
Good afternoon, everyone. Happy New Year. Welcome to another edition of the Dukia Gold World Press Conference. The video that we're just playing behind on the background was discussion on precious metals from the London Bullion Market Association, just giving perspective to the reasons why gold is climbing at astronomical highs and giving perspective on to the forces in geopolitics and economic crisis that shape the gold market. Thank you so much for attending this webinar. The link is in the chat. You can share it with your friends and family and all you wish to actually learn about why gold crossed the $5,000 mark. I'll begin our presentation in earnest, but to just give perspective on what is going on around the whole scene, I'll call our Chief Operating Officer, Mr. Bob Beasley, to just enter into the presentation while I switch my screens. Sir, you have the floor.
Thanks, Manuel. I just heard you use the term of astronomical highs. I don't think I would use the term astronomical highs because I think what we'll see is that what I certainly believe that the market is going to go somewhat higher, and looking at sort of future movements, looking forward to maybe 4 or 5 years ahead, depending on a variety of scenarios, whether it's inflationary or not, we would expect it to be up around the $9,000 level. But even so, we wouldn't see the market coming off, given the circumstances that we're seeing in the world at the moment. So I think the theme that I would work from would be why we should keep trusting gold. And I'll just bring up a few points. So first off, do we trust governments to positively manage the value of fiat money, i.e., the money in our bank accounts, the money in our pocketbooks, the money in our wallets? First off, do you trust current asset valuations? I did a little bit of research on this. I admit I did use AI to help me with this. Otherwise, it would have taken an awful long time. But I just want to draw some parallels in the US stock markets between 1929 and now. So back in 1929, 10% of households own shares. Though the economic fallout hit everybody, it was absolutely awful, as I'm sure you've read and seen historically. Now we get to the end of 2025. In the US, we've got 45% of total household wealth is held in stocks, mutual funds by US households and non-profits. So that totaled about $5 trillion worth of value. Now, the top 10% of these of the owners own approximately 90% of the total value of the stock market. So 10% again is a parallel with 1929. And some metrics indicate that Americans hold 52% of their capital in stocks, which is a large amount. Now, linked into this, obviously, the way the markets work out there, there's about, with the banks at the moment, there's about $138 billion of securities-based loans. There is 1.23 trillion of margin loans, which is a 36% increase year on year. and now margin debt is about 6.25% of real disposable personal income. That's the highest relative level in history. So there's just I'm sort of a little bit concerned. I think a lot of people have been concerned that there's a bubble in certain, the Mag 7 stocks or whatever you like to call it. But these stocks can have a very, very big effect on the indices. The next area that I would look at would be how do you expect governments to deal with their mounting debt and interest costs? Again, I'll look at the US. So their national debt is 38.5 trillion. The annual interest to service is now over 1 trillion. Now, it doesn't surprise me that Donald Trump wants to see interest rates down at 1%, because that'll save 2/3 of that interest cost. But then you come to the if you have an independent Federal Reserve or independent central banks, and government sort of on two sides, where you've got these increases in debts, how is the government going to reduce it? And this works across the world. So the US debt is basically a promise that the government would be able to tax the population to reduce that debt. Now, I don't think that that's going to be politically popular, a politically popular thing to do, because we would then be in a very difficult scenario for the government. But I think the more likely scenario is that we're going to have carrying on with inflation or debasement. Sorry, just excuse me one moment.
Again, Happy New Year, everyone. While we wait for the CEO, I would say we're delighted that everyone is here. We are happy also that God has been kind to all of us. Again, welcome to the Dukia Gold Wealth Management Series, the January 2026 edition. Welcome back, Paul.
Sorry, I just had I had something I quickly...
Just continue. Thank you.
Okay. Yeah, so my thought on this, I mean, at the moment, political machinations are going in a direction. So I think we're more likely to see inflation. Yes, inflation will happen with a growing economy, but I think it'll go beyond. I think it'll go beyond that, and we'll eventually see a lot greater inflation and debasement in the value of currencies. So that's that is a very good reason to carry on trusting in gold. I mean, obviously, we then go on. Is the world going through an extended period of geopolitical tension and uncertainty? And will this situation change in the near future? I really don't think so. Certainly not for the next 3 to 4 years, and who knows beyond that. I think we're going to carry on seeing geopolitical shocks. So again, if you hold gold, Would you sell it? Or should you buy it? Should you buy more? So, you know, going on beyond geopolitical uncertainty, this kind of works in the same sort of way. So is the US weaponizing its economy to threaten friendly as well as other economies? We've seen it. You know, we're seeing tariffs being slapped on willy-nilly from, you know, rates that work between 10% and 100%. You know, it seems to be done on a whim at the moment without an awful lot of planning and forethought. And looking at these threats that I've pointed out, do you think these are going to benefit you anyway, in any way? Personally, I don't think that they're going to benefit. They're not going to benefit me. That they are benefiting the value of gold that I'm holding, most certainly. But that gives me comfort that I'm holding something that that cushions me from those shocks. And because of these things that are going on, tariff threats, you know, weaponization of the economy, etc., etc. These sort of threats, sanctions threats, etc., are causing central banks to shift away from US bonds in favor of gold. We've seen that recently, where India has sold down quite a substantial chunk of US dollar bonds, and they will invest in gold. Poland has further increased what it can do. So I think from what you hear from me, we should keep trusting. We should keep trusting in gold to cushion ourselves from what's been happening, and that's already been borne out. You know, I remember talking back in probably 4 or 5 years ago about exactly these things, and they have come to fruition, but they've actually increased in severity, and it's very difficult to look and understand what's actually going on around the corner. So again, one of the old things that I talked about many years back was how to have a balanced portfolio. Now that has changed even further, from the old 60-40 stock and bond portfolio, i.e. 60% stocks, 40% bonds. You know, we're now looking at a very different balance in portfolios that people should give consideration to. So from the old to the new. So looking at it, I would suggest, and this has been worked on by a lot of people, that we look at a balance between 45% stocks, 15% bonds. So the bonds, I think, is a very interesting reduction. Then go to 15% safe haven gold. By safe haven, that means physical allocated gold that nobody can take away, and it's stored in your name. There's no credit risk or anything. Up to 10% in performance gold. So performance gold being mining equities, that sort of thing, because you still get good price leverage on the underlying price with a number of equities, and then maybe another 10% in commodities. So commodities being, say other precious metals, so silver, platinum, palladium, and obviously agro commodities and that sort of thing. But think about how that 10% would be balanced, and then probably another 5% in Bitcoin stroke Ethereum. And it's been interesting again recently, where we've seen the price of gold go far higher, and the price of Bitcoin has really not done anything. It's hung around, and I think that's showing another reason why gold is to be trusted. So thanks all for listening, and I hope that this has been useful for you. If anybody's got any questions, please put them on the chat, and I'll see if I can help out with answers to that. But otherwise, enjoy your afternoon and the rest of the presentation. Thank you all very much.
Thank you very much, sir, for that opening remark. We'll just kickstart the presentation in earnest. So welcome everyone to the Dukia Gold Wealth Management Seminar for January 2026. It's Happy New Year from all of us. So we pray that this year brings us blessings and fruitfulness in all circumstances of life. My name is Emmanuel Waka, and I'll be leading you through the presentation. So what's the topic for today? The topic for today is why gold matters again. I think throughout 2025, we gave perspective to the importance of gold in clarifying and making assets a worthwhile investment. But a lot of things have happened from January 1st down to January 29th. And the title of this presentation is to reiterate that effect, that's why gold matters again in the face of economic and geopolitical uncertainties. So as you all know, we're going to be making some forward-looking statements, and if you want to make an investment decision, we hereby plead that you consult an investment advisor. Now, we have a very robust team. You just listen to our Chief Operating Officer here, Mr. Paul Beasley. You will still listen to the Chairman, Mr. Tony Fabmidi, Managing Director, on our opening remarks, and other members of the team in making sure that this presentation becomes worthwhile. Why are we here? We are here to give you on objectives and aims to why you need to include gold as part of your portfolio. Now, we've seen the rapid increase in price from $4,400 an ounce last year down to $5,500 an ounce. I want to give you perspective as to why this is happening. In doing that, we are going to discuss the world in a rapid transition to an uncertain future, the rising uncertainties in bilateral trade agreements. We are going to review the old world order and give you perspective to geopolitical conflicts and economic fragmentation. We are going to see how major countries have been using sanctions and trade restrictions as weapons of war. And we are going to see the declining confidence in global monetary institutions. Also, we are going to discuss the year 2026, bond issuance, the implications for inflation, and the erosion of purchasing power and long-term trust. Also, we are going to give you discuss on gold strategic return from just being a commodity to a global anchor as a hedge against inflation, currency risks, and crisis, and what the central banks all around the world are doing, from the Central Bank of Nigeria in question to the People's Bank of China, the Federal Reserve, and all other central banks, and why this matters for you as an investor. But before we go into all of that, I'll invite the Managing Director of Dukia Gold, Mrs. Boside Owolabi, to introduce us and give us perspective into our presentation. MD, you have the floor.
Thank you very much, Emmanuel. Good afternoon, everyone, and it's my pleasure to welcome us all to the first in the series for the year 2026. And we pray that God sees us through and that we are all here when we have even the last one for the year, and that we'll all be able to look back and say that we are glad that we made the right decision concerning gold. It's pleasing for us to know that we've been on the right course. When we started last year, or when the last seminar we had, gold was still at about $4,000 plus per ounce. Today, it's already over 5,000 per dollars per ounce. So there's something definitely happening, and that is good. That is good for gold, and it borders around the serious instability that we've seen around the world. There are trade wars and political issues, and what we've always said is when all these things are happening, gold is stable. It does so well because that's the commodity, or it's as we usually say, it is money. So it's like everybody knows I'm not fighting the currency, or I don't need to be at the mercy of any currency. I have gold. So it's the time when economy central banks buy more gold. And we've seen that translate in the rate at which the prices have gone. So why are we here today? Yes, to re-emphasize what we've been saying and to also confirm that records have shown that gold is the way to go, and not just on a personal level, for organizations, for governments through their central banks. So the question is no longer asking ourselves, does gold fit into our portfolios, but how much gold is needed to protect against all these mounting pressures around and shocks around the world. So today we're going to have our chairman talk to you about this, and Emmanuel will go through the presentation. And we look forward to your contributions to this. And then, as usual, we would take questions at the end of the presentation. So you are advised to just type in your questions, and we'll take them at the end of all the presentations. So welcome, everybody, and I invite you to listen through, and you would really learn a lot. I will, so I will also join you in listening to the interesting and insightful presentations that are coming up. Thank you, everyone.
Thank you
Emmanuel.
so much. Thank you so much, ma'am, for that welcome address. And to usher us into the full weight of the presentation, I will invite the chairman of Dukia Gold, Mr. Tunde Fabimi, to open the floor. Chairman, sir, you have the floor.
Yep. Once again, I must say, thank God from whom all blessings flow. Happy New Year. It's always a joyful opportunity to meet as a community, believing in the future of gold, and of course, working seriously with each other to hold everyone's hands through a very rapidly changing world. One thing is certain, Paul Beasley, as Chief Operating Officer, has given, quote unquote, a very sincere international perspective. It's obvious there are only one or two things happening in the world. And if you put it very simply, it will be the treaties. It's going to be much more fundamental than the so-called 2008 situation with the banking industry. It's going to be more fundamental than COVID. In my opinion, I think it will be much more akin to a major seismic shift in everything that we all believe in. What are those things? Interestingly, you can say it's the three T's. It should be Tunde, Tunde, and Tunde if I could make that happen. Unfortunately, the new words to look out for in terms of the triple T's is Trump, tariff, and trade. If you take Trump as a president of a free country called America that has allowed everyone to use their currency as a mode and means of settlement, and therefore became a mode and means of storage of value or wealth, as well as a mode and means of transactionary motive and precautionary motive. It's interesting that Trump has basically taken a neutral store of value into a very caustic, weaponized store of value. It's in fact worse that they have, unfortunately, using one or two fairly poor examples, showed how power matters a lot rather than what they call democracy or negotiated rule-based world order. To the extent that the Trump effect is going to be very large in 2005 and 25. We called everyone's attention to it and we advised against uncertainty. We told everyone what to do. I'll repeat it very loud and clear this year. Trump is not only going to be loud, Trump is going to be the loudest noise in the world order. And to the extent that he's unpredictable, is very brash, is willing to use power, might as a bully, and basically shift the center of gravity of everything around him. You need to protect yourself, hold on to something that will not move, even though the whole vessel is basically being tossed upside down. Anyone who has flown an aircraft will know this. When you are going to go into turbulence, they say, everyone return to your seat, try and adjust the tray table in front of you. More importantly, they tell you to use your seatbelt and batten down. Anyone who's also going to take a safe trip is advised by the road safety, please wear your seatbelt and make sure that you are properly focused in whatever you do. We in Dukia Gold would like to warn every Nigerian, everyone who's a local or international citizen, to please take a very hard look at his portfolio, investment portfolio, and ensure that there is an anchor, a proper anchor that will not shift or will not disappear or will not scatter when this storm truly comes home to roost. Surely a storm can come, but even in the Bible, built on the house that is on the rock and not one that is very ephemeral. Two things are clear. If Trump would affect tariff, Trump is affecting tariff in a very negative way. Bilateral agreements have all come up now for what I call unilateral agreement. And unfortunately, even that unilateral agreement is not negotiated. It's basically imposed by one party against the other. And it's a fact now that rule of law is secondary, is rule of might that is primary. What this means is that the man who used to issue fiat currency that we all trusted and we all believed in to perform can basically wake up one day and say, you know what, I owe you 1 trillion. And because I don't like your face, I'm going to take it all. And what can you do? And they've done it in Venezuela. If a president can be abducted, surely anyone can be abducted. They've also blown up any vessel that they find in the sea in the name of the accuser is also the jury, is also the executor. And not only do they execute, they actually kill people dead without any repercussion. The world is at risk, and therefore the tariff would definitely play a large game in the midst of everything. Luckily, one of us, Mrs. Ngozi Okonjo-Iweala, is in charge of the World Trade Organization, and her statements prior and after the so-called Davos meeting is very, very ominous, but is also very, very clear. The only reason why the world is still trading is that the vessel was properly built and it's bulletproof, like they say, is shatterproof, like they say, but certainly the road ahead is very, very bumpy. And God forbid, if they blow the bridge in front of that road, the rest of the world may not be able to cross over. So batten down, because the end of fiat currency is very near. Trust is broken, trust is shattered, trust cannot be rebuilt on time. People will take a flight to safety. You cannot escape anymore from the euro to the dollar or from the dollar to the euro. I'm not certain that anybody wants to escape into the yuan or perhaps into the yen. Everybody's asking themselves, where is the strongest, safest store of value? And that's just for transactionary motive. But they knew it was coming. Russia was a good learning curve, and therefore quite a lot of the metals that were basically free and available have been bought by many central banks in the last 5-10 years. I think the purchase would continue for another 5-10 years, and it's therefore safe to say that perhaps sooner than later, the true store of value, definitely the store of value as a national reserve currency, is gold. The World Bank, under the Basel III, has already accepted it anyway. They've said there's gold, there's US dollar or international currency, perhaps, and of course, what they call the basket of currencies is available, is allowed as international trade and mode and means of settlement. To the extent that one of the platforms that allows you to settle in dollar has also been weaponized. Everyone has chosen to find a second way of doing things. The Chinese have launched their own. The BRICS are trying to launch one. And the Europeans who used to make everything happen on the so-called SWIFT system are also fairly taken aback. It's obvious today that the future of that settlement platform is at risk. If they used to see 100% volume and value of dollar transaction, surely it will come to about 45 sooner than later. As long as they are basically avoiding that platform, they need to find a new mode of trade and tariff settlement. One of the cheapest way to escape all of that, we now know, is gold. Russia has used it very, very effectively. There are sanctions, they couldn't use SWIFT, but they turned into gold, and basically they have been able to meet all their obligations. Is there enough gold in the world to go around? It's obvious. The rate of production of gold compared to the production of the same quantity of gold, there is always going to be a challenge in between the two. Once you and I understand that there is a shortage in supply and there is an increase in demand, it doesn't make any rocket science. Even if you were selling ordinary sugar or salt, the price of salt will go up. Therefore, we think and we now see that as long as Trump is making threats, tariff is still being used as a weapon, and basically trade must continue because it will take a while for every nation to become self-sufficient. A new mode or means and value for settlement of trade must evolve, and a currency that is safer for everyone must also evolve. While that new currency is being discovered in terms of fiat, I think it's obvious that everybody has just gone back to what I call the natural devolution of currency and natural evolution of currency. Don't forget that gold is the basis of the British pound sterling, which they used, hopefully, when they were king of the world. The pound sterling was pegged. Eventually, when the Americans came and also took over the reign of the world from the rest of the world, they also pegged the American dollar to gold. But as soon as they found the cheaper way of printing fiat currency, they tried to delink gold from the US dollar. It's obvious that the world has to go back either to linking the currency or basket of currency of the world to gold, or perhaps continue to reference dollar, but ensure that the single unit of currency is still 1 ounce. And therefore, what 1 ounce will buy 4 years ago was $2,000. The dollar is one that is devaluing, not the gold. If you still kept 1 ounce of gold today, it will give you in excess of 5,500. So if I were you, exit whatever you can exit and try to put as much of it into gold. And we're not asking you to put the one you want to use in Okeari to buy Omo, Milo, or whatever. You must treat it as if, look, when all is said and done, and my retirement is at play or in front of me as a strategy, what portion do I want to put away against my retirement? I will beg you, please consider gold seriously. Experts now know that you have to exit bond, and I'll tell you the reason why you'll exit bond. Experts have now realized that you have to exit dollar because in itself is being fully, rapidly devalued. Experts now know you have to avoid stocks, reason being that these two, if they implode, will certainly and strongly affect stocks. And more important is the fact that everybody now knows that fiat, which is I promise to pay, may not work. Therefore, the only thing left is gold. Therefore, what they are now advancing and advising is that in the good old days when it used to be 60-40 in terms of allocation, they are saying that if you can get up to 20% of your so-called permanent wealth into gold, it will make a lot of good sense. What it therefore means is if you had a portfolio of $100 before and you had 60% of it in stocks, bonds, and shares, 60-40, please find a way of exiting either of the two and making sure that at least you put 20% of it away now in gold. If you also feel you're comfortable with your 100, any new investment that you would need to make would necessarily need to say, okay, I will buy more gold first, and maybe and it's when I then rebalance my portfolio and I see it as whatever. So what it will mean is if you needed to balance a 100 portfolio with 20, you know what to do with the math. Again, we're not saying buy it because we say it. Talk to your financial advisor, talk to yourself, talk to your family, but certainly rather than owning a house in Ikoyi or owning a house in Banana, if you already have one, fantastic. If you don't, I would say to you, take a bit of money and put it in gold. We've seen it before. Houses can be empty and you may not get a tenant. It can happen any currency, anywhere. Ask Venezuela now. If you had the best house in Venezuela, after what happened, most foreigners have simply taken a flight, they've gone. They will say, I'll be back when you cure your insecurity and instability. What that means is their so-called high-yield estates are no longer finding tenants. They may not find tenants for the next 2 to 3, 5 years. Let's pray that they can heal on time, but it can happen. It can also happen in Africa. It happened before in many countries. Ask them in Congo, Brazzaville. Ask them also even in Ghana, that is next to us, or go to Sierra Leone. They've had good housing estates built in the good old days. When the trouble came, the way it is now, they got very, very empty. Therefore, even in putting your money permanently into housing, think twice, think more about your future, think also about the neutrality of the currency that will come. Let's talk about the Naira, and let's talk about bonds, and let's talk about the dollar. The dollar used to be very much in the region of 1.2 if you look at the Bloomberg index. Today, the dollar itself has basically devalued about 30 to 40% since last year. It's now basically around 1.1. And the idea is we believe it may virtually continue to slide. They need the dollar to be cheap so that they can export their products to the world. They need the oil and gas to come from circa $3 to maybe $1 a gallon. Hopefully, for them to do that, they need to bring oil prices down globally. If they choose to flood the world with oil seized out of Venezuela and the price of crude comes from $80 to $40, it has only one implication. The revenue base of Nigeria will alter. The ability to have a reserve that would meet most of our obligations would alter, and therefore even the rate of exchange of Naira to dollar is at risk. The only good thing is that because the dollar itself is losing value, maybe our valuation loss will not be very drastic. But I will say to you, I pray that the dollar gets to exchange at 1,200 to the dollar. That's our prayer. However, even that 1,200 to the dollar is going to buy a dollar that can only buy less, even in America. It's the story of the man who says, I'm going abroad with $500. Correct. If you went in 1970, $500 can do magic. But if you go into America today with $500, a taxi from the airport home would certainly cost you $70. A burger with a friend will now cost you another $100. What do you want to do with the balance? So the American currency was strong also in the past. Don't forget, the American currency is not as strong anymore. And therefore, I would beg you, while we used to escape and store our cash in dollar, or our currency in dollar, or our future in dollar, or our wealth in dollar, is good. I'm not saying exit it, but diversify away into a more permanent asset. Having said all of that, I think we should complete this conversation by looking at the last of the T's, which is trade. Nigeria is lucky, and say it as it is, Tinubu is lucky, if you would like to use that word, but only a prepared man can be this lucky. Tinubu has basically, as a government, revamped a huge amount of our oil and gas industry. And to that extent, we are beginning to attract good finance from extremely important investors. Shell, for instance, is bringing $20 billion into that sector. It's a major, major signal to say we are doing well. More important is the fact that we are diversifying away from oil. And indeed, the Ministry of Solid Mineral has always said Nigeria beyond oil. And for the first time, we are happy to report and see also the good work being done by the Minister for Solid Mineral Development, Dr. Alake. And because he's doing his work well, Nigeria is now beginning to tick positive in the solid mineral export. Surely, cement is a major export for Nigeria, it's solid minerals. And very soon, by the grace of God, gold will be a major export item and a major production item from Nigeria. We are doing our level-headed best at Dukia Gold. Again, I want to thank God for the mines exploration program that we embarked on. I want to thank the many staff, consultants, contractors, advisors that are working with us. I'd like to thank His Excellencies, the Governor of Ondo State and a few of the other Southwest governors for the help and rapprochement that we're getting across the divide. I also want to thank also the Honorable Minister also for his assistance. We will commence our mining program, and we would, of course, share the benefit of why you need also to get involved in the mining program and in the ownership of the products from that mine, again, copiously with you this afternoon. But let's go back to trade. Trade will be a major issue in 2026. The first time in a long time, the world now knows what Nigeria faces when it's trying to transport a good, maybe from Sokoto to Lagos, or from Maiduguri to Lagos, or from Abakaliki to Lagos. They meet a lot of checkpoints on the road that simply ask the stupid question, what thing you carry? Of course, I have goods and I'm a good carrier, and this is, I'm sailing from Venezuela, I'm carrying my so-called crude to a refinery in Singapore. They used to do it unfettered. Suddenly now, every ship that is leaving Venezuela suddenly comes across a roadblock mounted by the so-called Navy of the United States. And the question they ask is the same question the typical policeman asks in Nigeria, what thing you carry? And it's becoming a major issue that if they will do it in Venezuela, they will do it anywhere else. If they choose to teach us a lesson, which what they taught over the weekend, they taught us a fairly difficult lesson by saying we can actually fire a bomb over you from every direction, and we can get to the farthest corner, which is in Sokoto, which means that if they can get to Sokoto, they can get to Maiduguri, or perhaps get to Katsina, or Abuja, or Lagos, or Port Harcourt. And therefore, we ourselves must ask the question, is our trade safe? Can the trade for the world be safe? Can the trade of any country be blocked? Or can we get a blockade from any region, including ECOWAS? And if this happens, what is it that we have in reserve to be able to make sure that it works? Surely ECOWAS must brighten up. Unfortunately, it's fragmented, so that at least in terms of food, we will be able to be self-sufficient. No, sir, we are not. And to that extent, I would say we pray to God for a good harvest this coming rainy season. And if that doesn't come and we are not able to import everything freely, don't forget that the same route for Venezuela is going to be used by Argentina, is going to be used by a lot of people in the prairie. And basically all these matter a lot. So we believe that trade will be a major challenge across the world. Nigeria is better today because this same president has done a huge amount of work bringing in mining equipment, farming equipment, and doing quite a lot of things to make sure that we are able to do more and diversify our so-called production away from the traditional oil and gas, which is owned by everybody else in the world. And we are also able to now sell things that the world needs going forward. The joy of what I would also say is this. In our mining expedition, while our exploration went very, very well, we got lucky and found a huge quantum of lithium and a lot of access to what they call the trios, which is the light rare earth element and the heavy rare earth element. And therefore, if we can find, I'm certain that other people may be able to find, and what this would mean is that the strategic importance of Nigeria also in the mining industry is bound to increase. Nigeria is surely going to change from being an oil and gas country into an agric country, no doubt. We own one of the best land for agriculture, but more important is the fact that the quality of the solid mineral endowment in Nigeria is bound to make Nigeria a mining destination. We're working with everyone that matters and everyone that cares now to make sure that the mining program embarked on by Dukia Gold on its mines to market portfolio comes to full maturity. We want to thank a lot of our customers for believing in us by buying finished product. We also want to thank a lot of our customers who have also diversified away from just buying finished product into wanting to own shares in the mines that would manufacture or bring about the ore that would eventually get into finished product. We're grateful to say that mine does not just have gold, it will have gold, it will have a lot of precious metals, base metals, and a lot of rare earth elements and some lithium in it. So in concluding, where does the future lie? The future always lies in the hands of God. But God does not come down anymore. God sends his words. Some of the words that needs to be spoken, of course, must be spoken by the good prophets, the good bishops, the good men of God. But God also must send economists, must send good common sense people to talk to his own people. My job is whatever God has given you to do it well. God has given me the responsibility of trying to sell gold to every Nigerian so that you can protect your wealth, you can protect your future. Please hear what we are saying. Don't let it fall on dry ground. Don't let it fall onto deaf ears. Don't let it fall amongst thorns. Please, please listen to the need, the fact, the statement, the word, the advice. Buy gold, and I'm not telling you buy jewelry. I'm saying seriously buy investment grade gold. The platform that would allow you to buy it is being built. The app that can allow you now to basically download an app, get it picked up, and put it on your whatever, and be able to buy gold at the easiest of all easy ways to do. Buy gold that does not need a broker or an advisor or somebody that is delaying you in what decision you need to do. Buy as little as 5,000 gold every day. If that's the only thing you do, rather than buy Coca-Cola or beer, just buy gold, 5,000, and keep it away and store it away for the next 5 years. You'll be very, very grateful that you did. On this happy note, I welcome you again to Dukia Gold. I thank Paul for his earlier insight. It's going to be a very long meet because this is a master class. That's how we see it now, especially given what happened this morning. Gold crossed 5,500. We think it will get to 6,000 very easy. It may get up to 10. And when it gets to 10, then the real fallout will come. The military-industrial complex needs gold. The industrial complex itself needs gold. Individuals need gold. Central banks need gold. Everybody needs gold. You must take your own portion, keep it very safely, and be rest assured that the rest of the world would come to you to come and buy it. Again, don't behave like those who went to a party and they needed to have oil in their lamp and their lamp was dry. Store enough gold because you will be happy you did. No nation, no superpower, whether it was the Spaniards or the Portuguese when they started, what kept them alive was gold. The day they transferred all their gold into France and England, France became richer than them. Simple, France became a superpower, Napoleon. Again, after that, the British became a superpower. They took all the gold from South Africa, took all the diamonds, took it home. World War II came, that again happened. America came and took all the gold out of Germany, took all the gold out of England. In fact, England sent most of its gold to America because they were afraid that they would lose it. Ask America today, America became a superpower. Unfortunately, that same gold that we are all shouting, LBMA, 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 COMEX, most of that gold is in China today. Most of that gold is going back to India. Certainly, the center of gravity has changed. The world's currency, that is the fiat currency, has lost its balance to allocated gold. Don't be too late. Acquire your own gold as soon as possible. Do it on a daily basis, but make sure that you have an anchor that is very deep and steadfast. Put some money in gold. Talk to your advisor. God bless us till we meet again. Once again, I thank you all. Emmanuel, over to you.
Thank you very, very much, sir, for sharing that perspective on gold markets, the gold industry. For my end, I'll just give you people like an icing on the cake. I know the Chief Operating Officer, the Managing Director, and Chairman has given you the whole economic policies that shapes the world. But I'll just run through my presentation. That the world in 2026 has moved from a global village to a global neighborhood watch. We've seen presidents being abducted. We've seen the races of tariffs. We've seen weaponization of sanctions and trade tariffs. So in current context, they have now turned to a safety-first economy. For 30 years, the goal of business was to make things cheaply. That's why Apple extended their factories to East Asian countries. But now, with the whole geopolitical scenarios and the whole trade tariffs, most companies are looking on how to make things in a way that can't be affected by this uncertainty, which is why they are exploring two strategies, either bringing their factories back home, which is called reshoring, or nearshoring, sending their factories into easier places where they cannot access. You can see plans of global Fortune 500 companies planning to move to India, to Mexico, to Vietnam, just to decrease their exposure to economic uncertainty. Also, money has now been weaponized, which our chairman spoke about in detail. Countries now use tariffs, countries now use trade sanctions, countries now use restrictions to actually weaponize each other's currencies. You can see the threats by the United States on Canada trying to impose 100% tariffs on all their goods and services. And while that is the case, you can be surprised that the countries that are actually imposing the tariffs will actually pay for more goods and services due to an increase in price. So it's just a vis-a-vis affair. And in the past also, if countries had a trade war, they don't normally use Twitter to impose tariff restrictions. They actually meet at the World Trade Organization, or if there was a war, they meet to the United Nations to actually discuss all this in details. In 2026, that predictability has now been gone. The referees around the world have lost their whistles, and rules can just change overnight. During the past 2 weeks, you can see how a lot of billions of dollars were lost in the stock market, billions of dollars were lost in the crypto industry based on what markets are reacting to what global powers are saying. Also, the world has now been split into 2 or 3 clubs. We have the Western club, we have an Eastern club, and other clubs are forming. We have the BRICS Association, we have the NATO allies are forming just to safeguard themselves against this economic uncertainty. And in all these that is happening, gold has been the trustworthy insurance for a burning global systems. People are no longer buying gold as a means to get rich, to put on their jewelries or their watches or their necklaces. They are now buying gold because they no longer trust the old way of doing business that will survive in the next coming years. They have seen the impacts of uncertainty, they have seen the impacts of restrictions, and they are now moving towards gold, a radical debasement trade, moving towards gold to actually cure all these uncertainties. And Nigeria is definitely at the point of all this climax. We have a total budget of 2026 with 58.47 trillion naira. And within this budget, we are hoping that the crude oil production will reach 1.84 million barrels. And the benchmark will be $64.85 per barrel. But what is something to noteworthy in this presentation is that we have amassed quite a significant amount of debt, and we are spending $15.5 trillion naira to actually service this debt. So Nigeria is borrowing at a radical exponential rate and overusing their goods and services to actually do external debt servicing. And when countries begin to borrow heavily, the money supply in those countries will begin to increase faster than the economic inputs. When countries go to the international institutions like the World Bank or the IMF to borrow, the money supply increases faster than the economic output, which now leads to inflation. Now, you know that last year, inflation was scoring over 30% until in February when the government decided to rebase their currencies. But that doesn't withstand the fact that we are trying to propose new loans reaching approximately 17.89 trillion naira to service our debt. Now, with these radical tons of inflation, the government has to reach out to an institution to actually manage that inflationary crisis. And guess what they turn to? They turn to the central bank. So, and central banks actually helps balance this inflation rates by using what they call interest rates. Now, interest rates is like a double-edged sword. If you increase the interest rates, definitely they are going to decrease the way people borrow money to service goods and services. They're going to increase from the fuel price to the price of goods and services in the market. Everything is just going to increase because there's more money to be paid on an interest that you have already gotten. Now, you can say, okay, why doesn't the government just stop borrowing in the first place and go back to what they were doing before? But you have to now see that while low interest rates can reduce the cost of borrowing and ease fiscal pressures, it can also fuel inflation and weaken the currency values. So the central bank, as they meet continually, they either adjust or increase the interest rates based on the economic uncertainties around the world. But we are now dealing with forces that are beyond what the central bank can do. We can see global stock markets being wiped out in an instant because of the president's tweet. We can see countries where their presidents can just sit down and be abducted. We have seen the rising uncertainty. So all these uncertainties are actually fueling all the investors to actually shift their purchasing power from fiat currency, which is governed by all the central banks around the world, into hard assets. And what is their assets turned into? Gold. Gold has played the role of a safe haven asset because it's not tied to a government's fiscal balance. It's not tied to a monetary policy. It's not tied to a trade restrictions. It's not tied to anything. It's a hard asset that withstands the economic crisis of the government. And when confidence in fiat systems falters, the demand from gold and other hard assets will definitely begin to rise. That's why you see the price of gold in like January last year, it was close to like $2,500 an ounce. And currently it's above even $5,500 an ounce. Gold is very strategic because last year we were preaching to people to buy gold as a stabilizing of the currencies. But this year, it's now become very, very obvious that definitely the uncertainties will not end. Gold would actually exist outside modern financial systems. It doesn't rely on governments, or it cannot be printed, it cannot be diluted, it cannot wait for a US system to open up before it's exchanged. Its value is recognized globally across cultures and generations. It's not in speed or innovation. It's not like crypto that, oh, it's very, we are waiting for a government regulation to make it legal. It is very, very stable. But it helps ensure that the total value of what you've earned over the course of time doesn't disappear quietly. So we are advocating that central banks have been holding gold, pension funds have been holding gold, newcomer investors are currently rushing towards gold, but the underlying basis is this, that gold works best as a foundation. We are not trying to devalue the essence of the fiat currencies, even though they are already devaluing, but we are giving you the best bet of all your investment assets, and the best bet of it is actually gold. And why is this reasons? And why is gold the best bet for your assets? One, it doesn't have any counterparty risks. Unlike fiat currencies or government bonds or bank deposits, gold is a tangible asset that doesn't hold any counterparty risks. It's not dependent on the promise or solvency of a financial institutions. The second is a better hedge against inflation. Gold price will definitely increase as the money supply expands. We know that the US is now $38 trillion in debt. We know that Nigeria is trying to extend their loan capacity to over 17.89 trillion naira. And we know that definitely we are going to see more debt around the world. And that debt will definitely increase the rate of inflation. With all these inflationary measures being taken, gold will actually be the better form of hedge against inflation as currencies all around the world begin to devalue. Definitely, gold has been, we have seen the play out of this in the price of gold. It's now like a means of trust, because investors can no longer trust their central banks to make sure that the value of their fiat currency is stable. So guess where they now turn to? They now turn to gold to make sure that they actually give the best form of hedge against inflation. And you can see that increase by all the central banks around the world, even in Africa, increasing their form of value. And you can see a picture that gold is, the market capitalization of gold is even more than the market capitalization of Apple or Alphabet. So this means that for you as an investor, it's no brainer. It's not a advice. It's something of a strategic need that you now need to include gold as part of your portfolios. We're advocating the include 10% of your assets into gold last year, but investors are now saying with the bond issuance, with the inflationary measures, with the geopolitics that are increasing, people should begin to even think of allocating 20% of their whole investment value into gold and avoid the necessary uncertainties. Now, okay, if you bought gold last year, you say, okay, I'm happy that I bought gold last year. I did from $2,500 to $5,000. What is the best thing to do now? Should I be selling? And I think that's actually the wrong approach. Gold is telling you that the economic uncertainty is still prevailing, that the geopolitical crisis will still remain the same. So that increase in price is showing you a picture of what is actually happening around the globe. So the best bet is not to actually sell your gold and convert it into a currency that is currently devaluing. The best bet is to convert the devaluing currency and begin to stock up it in gold. You must adopt a diversified strategy that balances gold with other liquid assets, ensuring that your whole investment portfolio is not exposed to liquidity shortage or price swings. You have to combine prudent diversification, risk management tools, a strong institutional governance, and advice from your financial advisor to begin to incorporate gold as part of your investment portfolio. And okay, how do you begin to do that? We've mentioned that gold has increased to $5,500 in price. So how do I now begin to open myself up to the gold industry and begin to hedge the portfolio, my investment portfolio with gold as part of my asset classes? Definitely, you must, as an individual, as an investor, obtain a long-term strategy. You should not be buying gold to take advantage of the price. Now, the Goldman Sachs released a report that gold will actually climb to $5,400 before the end of the year. We've seen that happen this morning, that gold has actually climbed to $5,500. So the best approach you should take is obtain a long-term strategy, focus on accumulating gold over time and holding it for a lot of time to actually benefit from this constant appreciation. You should not adopt the strategy of, okay, let me buy at 5,500 today and pray and hope that it gets to $6,000 before March, where I now hope to sell. No, you won't actually get the major benefits that you would have if you are buying gold and storing it for 5 years, 10 years, and over the course of your lifetime. So the first approach you should take is a long-term strategy. Another approach you should take is dollar cost averaging, which our chairman discussed in detail. You can even take 5,000 naira from your income and begin to invest in gold every day as the lowest amount that you can start with. Or you can say, okay, if I want to buy, hold at least 1 ounce of gold before the end of the year, why don't I take 100,000 naira and be investing every week? Or why don't I buy 1 gram and keep buying a minimum of 4 grams till I hold 1 ounce? Definitely, over time, you will actually get far more value from your gold holdings than you checking out the market rates and actually looking for ways to beat the market. So dollar cost averaging is another tool that you can use to actually invoke and hedge your investment portfolio against currency risks. Also, you should align good purchases with financial milestones. If you are planning to go to, now these are people who are, okay, you're planning to retire, you're planning to buy a house, you're planning to get a car, you're planning to get married, and you need a huge sum of money to actually make sure that financial goal is worthwhile. You can definitely begin to save a huge chunk of it in a store of value that doesn't depreciate with an interest rate. You can begin to take huge sums of money to begin to save, like let's say in 5 years, you need 10 ounces of gold to pay for an education. You can begin to buy, okay, 1 gram every month and begin to save up till you reach your goal of 10 ounces. Another is balance gold with other financial goals, which has been reiterated throughout this presentation. We previously advised to allocate 5 to 15% of your holdings into gold, but based on what we are seeing this January alone, we don't know what is going to happen in February. Based on what we are seeing this January alone, experts are beginning to ask you to even diversify as much as 20% of your assets into gold. Now, the global assets under management, gold accounts for just less than 1%, as discussed in the LBMA presentation I showed earlier. So there's not going to be every gold to get to everyone. But you as an individual can begin to take the best step, the bold step, to actually begin to increase your portfolio into gold. Definitely, as an individual, you must have a long-term strategy to holding gold. You must begin to do dollar cost averaging if you can. And also, you must begin to tie gold as part of your investment portfolio. You may have real estate in Banana Island or in Asokoro in Abuja. You may have houses in London or in Dubai. But definitely, those assets can come under the blink of an eye to ashes if, with the current geopolitical uncertainty, it increases. So the best bet for you as an individual is begin to diversify those assets into gold as a store of value. And the firm that is actually preaching this gospel, we have been preaching this gospel in 2019, preaching this gospel to you is actually Dukia Gold. We are a leading gold and precious metals reformer in Nigeria and West Africa, offering full service bullion solutions. So down from the exploration of gold to the refining of gold to the trading of gold, we have opened up ourselves to the whole precious metal supply chain, ensuring that wherever you are, wherever you can come in, we can actually come in and benefit from the precious metal supply chain. Most importantly, keeping gold as part of your investment portfolio. You've been featured around the world, from the Business Days to the Guardian, down to All Africa to SEC, giving Nigerians the best method of hedging their portfolios and diversifying their assets into gold. For you, and one of our basic traits, one of our core principles is compliance and transparency. Because of the regulations surrounding the gold industry by the Ministry of Solid Minerals Development and the London Bullion Market Association, we have to make sure that every individual that buys gold from Dukia Gold is assured that their gold incorporates regular audits, rigorous sourcing processes, and transparent transaction processes. And all these are done through the KYC verification that is done as part of your registration onto Dukia Gold. Now, I must say that sometimes people are actually afraid or tense to actually do KYC verification. I know that has reduced this year, but we are trying to make all the processes easy so that you can be rest assured that any gold you purchase from Dukia Gold is meeting the best standard of gold internationally, not only in Nigeria. So, as an individual, where do you start from? You start from going directly to the website, registering, click on sign up, enter your personal information, verify your BVN and complete your KYC, and voila, you are opened to the gold exchange system. You can choose to buy from as low as 5,000 naira, but if you're already an institutional investor seeking to give better perspectives to your investment portfolio, you can choose to buy from as high as 1 ounce. But all this will have to be done after consulting your financial advisors. I hope this presentation from the Chief Operating Officer to the Managing Director to the Chairman has opened you up to the reasons why gold is actually increasing in price. There's a lot of uncertainty around the world. We don't know how bad things will get. We've seen people weaponize trade restrictions. We've seen people weaponize finance. We've seen that even the global systems of trade like the WTO, the IMF have lost their predictability. And everybody is really looking for the best bet and the best store of value. And guess what? It's been the same old gold that has been in existence since the dawn of time. So the gold value will keep increasing. We hope that everything gets back to normal, but we can't guarantee that everything will get back to normal because presidents are acting based on their own volition. So for you as an investor, central banks are doing it, the pension funds are doing it. For you as an individual, the best bet is to actually diversify a major part of your portfolio into gold. And the best time to do it is actually now. Don't take advantage of gold because you need to take advantage of the price increase and get a lot of money. It won't work. People who have actually gained the most value of gold have been holding gold since we even started. And that can be your own story if you choose to start to buy gold today. Thank you so much. And we'll take the questions and answers. Thank you very much.
Again, I want to say very big thank you to you, Emmanuel. And like they say, we ought to give you a big round of applause. One thing is certain. It's a master class. That's what you have delivered. And I'm happy that you delivered it in a way that is extremely clear. The message is very singular. Buy gold today, buy gold tomorrow, store it the way you store a house in Abuja, store it in the way in which you store a house in England, store it in a way you store a house in Ikoyi or wherever. Once you are able to buy and store gold, hopefully you can be rest assured that tomorrow will be better than today. And if tomorrow will be better than today, surely day after will be better, because every day you put away your future in gold, you can be rest assured that that future is secured by the grace of God. Fiat currency is about to extinguish. They tried to migrate from fiat currency into what you refer to as non-fiat cryptocurrency. We've seen it. It's gone as low and as high as $100,000, and then went from $100,000 to as low as it can be in whatever currency whatever situation that you want to call it. All of this have very, very serious implications for us, for you, and for the rest of Nigeria. And because Nigeria is part of the global world, whether it's global South or global East, ECOWAS or global African Free Trade Zone, we are still part of the world. It's no longer bilateral, it's now unilateral. Everybody needs to save themselves. And if Nigeria is going to save itself, each state, even confederating within Nigeria, must save itself. Every household must save itself, and every head of household must save his household, and therefore every member of the household must also save themselves. And there is a national savings plan as well as a national defense plan, as well as a national security plan. There's also a national financial services plan. There is a national so-called capital market plan. All of those plans have said, keep a current account. Put your cash inside it to meet transactionary motives. To your transactionary motive account, which is a current account, is attached what they call a credit or a debit card. That is a given. They've also said, open a savings account. And that account, again, has been opened by most of us. Again, most people who used to have a savings account now realize that they can have a debit card against their savings account. One thing that you also realize that they've advised all of us, open a capital market account. Go and talk to your broker, your bond, your stocks or shares. So everybody has a capital market account. What we are begging you is this. If you have been smart enough to have all of those accounts, please open a gold investment account, please. And again, diversify your investment away from cash that is lying idle, that will be eaten up by inflation, that will be basically eaten up by devaluation, and that may be eaten up even by unnecessary exposures to risks. Diversify away from cash savings, whether it's 90-day, 180-day. Learn to think long-term. Diversify as much as possible or you can away from stocks, shares, and bonds. Put at least 20% of your long-term capital in gold. If you are trying to buy a house at age 20, at age 20, if the house you like to live in is in Ikoyi, find the value of that house, 120 million, 1 billion, it doesn't matter. Start saving towards that 1 billion. But what we are saying is don't save that money anymore in cash. Put it away in gold. Why? If you wanted to buy a house in England many years ago with, £250,000 or perhaps $300,000, you would have bought some house. The quantity of gold that you needed then, interestingly, is the same quantity of gold that you need today. That house, which was worth 300,000 10, 15, 20 years ago, may be as high as 800,000, 1 million pounds. So learn that gold is going to continue to hold its own value. Gold is 1 ounce is 1 ounce. What will happen is that the 1 ounce gold, which used to be $3.50, is now $5,500. Nothing has changed with the quantity of gold. It's still 1 ounce. What has happened is that the value of the dollar has depreciated from $3.5 to 5,500. So again, store your value in a currency, in an asset, in a program, in an allocated gold that will surely help you manage your future. Anyone thinking of retirement, anyone wanting to have a big party at age 50 or age 70 or age 90, store that money in gold. Make sure that you are safe. Prepare for the worst. Pray that the best will come. But at least if you are properly prepared, when the best comes, you can actually, in fact, say to yourself, I'm well stored and I'm well protected. We are still in the season of plenty. Store, just like they did in Egypt. Store, because if you don't store in gold, when this trouble truly comes and the debasement to the dollar truly arrives, and the debasement of the euro currency also arrives, and the world truly says trade can only be done if I'm sure of what I'm getting. What they would like to see is, do you have physical gold? If you say no, they will say, well, find somebody who has as your guarantor. Surely the center of gravity of the world has changed. The center of gravity has shifted from fiat currency. It's shifting to allocated gold. Read up on Basel III. Read up on anything the world is saying. Listen carefully to the treaties. Listen to Trump, but be careful. Listen to his pronouncements on tariffs. Listen to his pronouncements on trade. Every time you see anything that is going to be uncertain, buy more gold. You'll be grateful. You'll be happy that you did. We look forward to being able to be of service to you in your gold acquisition story. We would answer any question that you throw at us. We'll try and also be of service to you 24 hours of the day, 7 days a week, if it's possible. We've put in place 2 platforms now that can help. We have a web-based platform. Everybody already is on it. We have introduced an app, and basically we are testing and helping everyone to basically migrate onto the app. We believe that with your early adoption, we'll be able to have a very public pronouncement regarding quite a few new things that we're doing. But I'm grateful to God that this webinar is now holding again this year. We have 11 more to go. Every time we would research, every day we would research, and we'll make our research and presentation to you at the last Thursday of every month by the grace of God. God be with us once again till we meet again. I would ask that Emmanuel try to answer any question that is currently available on the platform. Over to you. Thank you all. Most grateful. Thank you, Paul. Thank you, MD. Thank you, Emmanuel. Thank you for all the staff that prepared that presentation. I'm very grateful.
Thank you very much, sir, for that remarks. I'm currently answering some questions, but I think one the major reason people are having is with the uploading documents to the platform. Now, as part of your verification processes, you actually need to upload some documents, either your proof of identity and your verified ID, to the platform as part of your verification processes. Now, this is actually easy if you know the documents you actually filed. We request for a proof of ID, either your voter's card, your NIN, or your driving license, or your passport. And we request a proof of address. It can be your utility bill or your bank statement or whatever that shows that your address that you actually inputted in that platform is actually the same address that I verified. Now, there's currently no discrepancy with that verification, but if you are having an issue with uploading those documents, we've imputed our mail in the chat, so you can just send the message and I'll address it very succinctly. So just impute that message in. I'll impute our support email in the chat. Just send us a message and we'll address it immediately. But that shouldn't be a problem. It's just part of the verification processes that is currently ongoing. I hope that addresses major questions on uploading documents. So there is one on...
Let me help.
Okay.
Let me help. Okay. So basically, what we've done over the last 3 weeks when everybody went on holiday was our IT team stayed back to work on the many frequently asked issues and many serious issues regarding documentation and ease of registration on the platform. I would say to you, our platform is now better optimized. Our service provider is a company that we have also called to further optimize the way they are able to help us take, as a mailman, information from Dukia Gold. We send it through their pay through Beta Hire platform to NIBS. NIBS, of course, is fully optimized. The banks use it, everybody uses it. So what we are doing is asking a secured network to take your information, help us ask NIBS if it's okay. We don't see it, and basically they send it back. So therefore, I can assure you that we are improving and will continue to optimize and improve ourselves. Our app is a more seamless platform also now. So apart from using the web-based solution, you can also basically open up on the app, and basically because you have an app, it's easier for most of the so-called Gen Z, Gen X, and the rest of us who are old enough to know how to navigate it. But in the unlikely event that you also still have issues and you would like to visit a physical office, we have a physical office. It's in 13 Mekong Crescent, for instance, in Maitama, Abuja, that you can visit. But we don't encourage you to waste your money coming to an office, because there's nothing you are coming to do other than coming to see a human being. If you have an issue, you can ask us to set up a Zoom meeting with you, a WhatsApp call. If you like to see the face of any one of us, this is our face. As you can see, it's an office, everything works. The reason why we also don't want people in our office is gold is also something that everybody thinks is discreet, and we don't necessarily need to have a crowd around us before we're able to serve you. The world is much more modern than that. I've also asked people wanting to say, okay, where's your mine? It's in Ondo State. It's basically near Owo. It's near Akure, and basically it's also near Iduani, Pele, and the rest of them. Again, you are welcome to visit, but again, it's not a site you want to visit on the day they are trying to blow up the ground so that they can bring out what is under the ground for processing. All of the things that you need to be aware of, we would continue, and maybe next month we would actually show you a short clip of how the mining takes place, how processing takes place, and how the production of a doré takes place. Most people have also been told the story of a refinery in Lagos, and the federal government has clarified it was never us, but we understand what is happening. What is most important for us to again reiterate for all of you is gold mining is everywhere. Whether it's in South Africa, it's in Zimbabwe, it's in Nigeria, it's in Zamfara, it's in Kaduna. As we speak, there's some gold out of the so-called lead that is won out of the Ebonyi. There's gold in Kogi, there's gold in Edo, there's gold in Maiduguri, there's gold in Katsina, there's gold everywhere. The question is, what is the process or procedure for producing that gold, and how can you then take it and make it an investment-grade gold? What distinguishes Dukia Gold is our ability to only touch and sell investment-grade gold with known provenance. Again, we've answered those questions. We've reiterated what distinguishes an investment-grade gold from any other type of gold. We've also shown you why provenance matters and why basically you should also try to own allocated, physically allocated gold, not a piece of paper that you don't have physical gold backing it up. So we only deal in allocated physical gold products, and basically we'll educate you as we go along on this. Our next webinar will be more dedicated to talking to you about crypto and physical fiat currency, and also what they call tokenization, which in itself is not crypto, because there is what they call safe coins and virtual coins. My job is to remind you, we don't recommend virtual. Don't do virtual coins, because those virtual coins, crypto, bitcoins, we've seen it go to 100, come back to 86, is just an alternate fiat currency. Gold, in our instance, is not a currency that we are recommending as fiat. We are saying buy physical deliverable gold, so that when they say, bring my gold, if you can buy up to 1 gram, then you are able to take physical delivery of it. And therefore, it should be a lot easier for you to say, I know where my wealth is stored. I know what quantity of that wealth I've stored. And basically, we can then say to you, you are worth 1 kilogram. If 1 kilogram is your value, if it goes from $5,500 to $6,000 an ounce, it will translate immediately. Nothing will change about the quantity that you have. It should still be 1 kg. The only good thing is that you can really see the value of your personal wealth again move in the correct direction. And it's not moving really. What is happening is the dollar is being devalued. The world is at risk. In order to be able to pay you the risk rate premium that you are getting, rather than putting it on interest and gold simply reflects it as a price that is certain at a point in time. And none of us can fix it. It's worldwide pegged. And therefore, you are not reacting to a Nigerian situation. You are not reacting to an American situation. You're actually reacting to a worldwide situation which is in your best interest. Michael, Emmanuel, sorry, I yield back to you. Paul, if you also want to answer a question or two, over to you, Emmanuel. But you have a physical office, and you have every other thing that you need in terms of physical. Again, we don't keep gold by ourselves, and we don't keep gold in our offices, just so that you know. We tried it in the beginning, 2-3 years ago. It does not make sense because in itself, apart from seeing it every day and laughing, the better place to keep gold is in a vault. We keep all our gold in brinks, and we do so with every joy. Reason being, that's a fairly safe place to keep things. The best place to keep everything is with God, but even God creates human beings who are able to expertise in certain things. Brinks keeps all our gold, but if you are good and brave enough that you want to keep it in your house, you are allowed to import it directly and it will be delivered directly to your house. It doesn't even come to the office. It's from the airport to your home via a secure transportation. So just to let you know that everything about us is transparent, and we are happy that everyone is happy with the quality of services they are receiving. Over to you, Emmanuel.
Okay, thank you. Thank you very much for that explanation. For more inquiries, I know many people are asking about BVN verification, KYC uploads. I've actually inputted our FAQs in the chat, so you can just read up and see how we go through all this in a very seamless process. Because this webinar is just focused on a particular topic, I don't want to extend the time allotted and compress everyone into that. But our FAQs actually answer all our information concerning registration, uploading documents, what documents do I need, what documents do I need to upload, how is my BVN verified, every other question you can think of concerning the registration process, and videos that you can actually watch to see how it all goes through. All those information are in our FAQs. We've kept them there to actually streamline the process of registration. So if you have any other questions into the presentation that we did today, or any just concerns concerning how the gold industry is working, you can just say it in the chat and I'll read it out and we'll answer as soon as possible. Okay.
Again, Emmanuel, I want to say a very big thank you. Most of what you have said, most of what you are doing, especially by releasing the FAQ, it's very good. I am very happy. Again, there's no way anybody's gold value can reduce. What you bought is what you bought. And in terms of the appreciation, I would like to say to you, the appreciation is not even awarded to us or awarded to you. It's awarded by the market based on a freely given price. Again, for those who don't understand gold, I'm sure you have bought dollar before and sold dollar. There's a known price for dollar. If you buy it from the federal government, it's a published amount. Every bank will sell it at that. Of course, each bank will then add their service or whatever to it. So we don't fix the price of gold. We take the price of gold from an international source and we make sure it's there. If you buy, just like you buy in dollar, you buy it at the price. If you sell, of course, you sell less commission to be able to get it sold. So please, again, anytime you are not sure of how to interpret data, be kind enough, send a question. You have a personal email to everybody who is a customer. You have a personal email to that account. You can always use it. It's free. Any question you send will be answered as soon as possible, but definitely within the hour, if not minutes. And we, of course, would always ensure that you are okay. We are very clear about what we are building. It's a world-class platform. It's a world-class platform that would, of course, allow you very, very soon an opportunity to attach a debit card or a credit card to it, so that even if you wish to spend your gold or wish to liquidate your gold into cash, you don't again need to call us to sell, or you don't need to do any action except, of course, put your so-called Dukia gold card into an ATM or into a POS, or perhaps into a contactless platform on a phone, and you'll be able to have instant access to your wealth. I am extremely grateful that everything is going according to plan on our mines to market ecosystem. We have extremely good news for you in the month of February and March, and hopefully we'll be able to work even with the ministry and the minister to make extremely important announcements for Nigeria. We'll also be working with the governments of the places where we have our assets from Southwest up to everywhere else that we have it. And we'll be able to also have very interesting invites to you to join us either virtually or physically at some of the other events. But one thing is certain, there will be 11 more seminars this year, basically informing, educating, and communicating with you on what is new and what's happening around gold. We'll try and give you better insight. We've done that today. The world is at risk. There's the Trump, there's the tariff, and there is the so-called trade uncertainty. As long as Trump remains uncertain, as long as trade remains uncertain, as long as the tariff, which is multilateral or unilateral, remains uncertain, the world will continue to be uncertain. Uncertainty is not good for commerce. Uncertainty is not good for inflation. Uncertainty is not good for investment. The best thing is escape to a safe haven asset, escape to an asset that has been known over the last 5,000, 10,000 years to actually store value, escape into what other nations have used to rule the world, whether it's Spain or Portugal or London or England, United Kingdom or America. Please buy gold, invest in gold, visit any of the Dukia platforms. You'll be glad with it. Emmanuel, over to you so that you can close.
All right. Thank you very much, sir, for that. If you have any other questions, I've imputed our emails and our website into the chat that you can just please send us an email and we'll respond as soon as possible. So any other questions concerning, I know the issues of registration has already been solved, but if you need maybe someone to help just walk you through that whole process, just send us an email and we'll be glad to assist you. Okay, please, if you have a question, it's most appropriate that you type it in the chat. I really don't want to extend this presentation more than is necessary. Please just type it in the chat or send us an email. We'll respond to it as soon as possible. So,
just let me again say the following. The world believes that there is not enough gold to go around. We know that there is not enough gold to go around. And that's why they call it precious metals. There are two places where gold is stored. Gold is stored above ground, or gold is stored below ground. To get gold out of the storage put in place by God, you have to go through a very long, extensive exploration, geophysical, geotechnical, geological, geochemical program in the name of exploration. You have to go through a long-drawn community negotiation, ESG, and getting a final mining lease or a small-scale mining license. You then have to assemble the finance to be able to get that gold out of the ground, processed into a doré. And not every doré, not every produced gold can enter into the investment value chain. Provenance matters, LBMA matters, LME matters, all those things matter. Minimata matters, WTO matters, OECD matters. No amount of Trump pronouncement or imbalance of trade pronouncement or tariff pronouncements can change the fact that a gold doré is a gold doré, an investment grade gold is an investment grade gold. And therefore, be careful. We would continue to tell you, buy gold, one, because it's going to remain scarce, and because everybody who is now looking for a scarce commodity is bound to pay more when he realizes that it's very, very scarce. Don't be the last man on the queue. What it would only give you is anxiety. If what you have in your pocket is 5,000, I'll repeat, buy it, leave the queue, go and join it again. Come every day, buy 5,000. Don't wait till you have 500,000. Maybe on that day when you get there, there'll still be gold, but you'll be buying it at a rate which is far in excess of common sense. We think, and we know now, gold will remain above 5,000 this year. We think gold would reach 6,000 easily, given what we know. We think that gold would trade around $10,000 by the end of the year, all things being equal, as long as the triple T's continue to be unstable. The reason is simple. Gold in itself can only be stored, but unfortunately, gold in itself is required in the so-called military-industrial complex. For those who understand what I'm saying, go and read it. Gold and its uses in the military-industrial complex. There's a second need for gold. There's a need for gold in the so-called civil industrial complex, especially in the manufacture of electronics, whether it's NVIDIA chip or a microphone or a phone or any electronic system that is worthy. An iPad, a Samsung mobile phone, an Apple mobile phone has more gold in it than most earrings that you wear today, or most wedding rings that you wear. They have more gold inside it. So there will be a continuous demand for gold. That is a given. Again, the sister asset to gold is silver. I have good news for you. Good news is that hopefully, because our mine in production will generate a bit of silver, we'll be able to offer silver by the fourth quarter of this year, if not earlier, but certainly by the fourth quarter as part of what you can invest in. So prepare yourselves to be able to, again, invest in silver. What's silver? Silver is going to rule the world, especially if solar panels continue to be a choice for most people who want to move away from paying NEPA bills. Therefore, the need for silver is a guarantee. Copper may also be very, very interesting. If they continue to produce electronic vehicles and continue to look for batteries, they have to look for something to be able to conduct electricity from the power base, which is the battery, to the consumption base, which is the so-called motor. Again, even in that dynamo, there is a lot of copper. So you will see an elevated demand for copper. But more important is that when you then need to make a good contactor, you have to have the best of all the metals. The best of all the metals to do that oftentimes is gold. Therefore, apart from saving gold physically, there is a requirement in the world today to consume far more gold than has ever been used since the beginning of the industrial complex and industrial revolution of the world. Go and sleep. The price of gold will go up. Go and sleep. The price of gold will sustain itself. Go and sleep. The dollar is going to be cheap. So if you made a mistake and you stored your money in gold about a year ago, you'll be better off, because if you look at it, you would have bought your dollar at 1,500 to the dollar. That dollar today is at 1,450. It's going to go to 1,200. And that gold or that dollar that you bought on that day, lucky for you, has also come in its own intrinsic purchasing power from 1.2 to 1.1, and it's going to go lower. My advice, our advice is talk again to your advisor, but take what we are saying because it's well researched. Gold is going to be the stronger of all store of value going forward, at least over the next 5 to 6 years. Bond will get cheaper. Unfortunately, the bond that gets cheaper would only compound the already compounded situation. Inflation will be remaining elevated. And inflation is remaining elevated, it will be foolhardy for anyone to try and reduce interest rates. So we are in very dire straits with monetary policies, fiscal policies, tax policies. Everything in the world, including Nigeria, is uncertain. Please, please, please listen to what we have said. Check the facts, read about it, watch YouTube, be interested in yourself, save yourself, save your future. Buy a bit of gold. Let's talk again next month. God be with us till we meet again. Good afternoon, everyone. Over to you, sir.
All right. Good afternoon, everyone. If you have any further questions, please, our emails are on the chat. Just send us an email. We've run out of time. This was supposed to be 1 hour, 30 minutes presentation, but I think I've shut it up close to 2 hours. So in wrapping up, we have given you the necessity of why you need to include gold as part of your investment portfolio. So we urge you, the global circumstances are not looking funny. So we urge you to make that decision and include gold as part of your investment portfolio. Any question that will come to our support mail, we'll definitely address. If we need someone to walk you through, our customer support reps are all over the line waiting to attend to your conversations. We just need to wrap up this presentation, but thank you so much.
Before you wrap up,
Okay.
it's important that I do recognize the presence of the Honorable Minister for Mines and Mineral Development. Indeed, we are always very grateful. You attend, you send your representative, you have a good listening ear to the industry. You are building up that industry far better than anyone could have imagined. Again, we remain loyal, we remain grateful for creating the right enabling environment for the trade and the industry to grow. I, again, will say the following. Do I say the price of gold won't crash? Good luck to you. Nobody is God. It can crash. But what we're saying is silver will crash before gold. Surely bonds will crash much more faster than silver. And indeed, the currency will crash even worse than bond, will crash even worse than silver. It will take a while before gold can join them as a crash. What will happen is when all that needs to crash, including the bonds, the stock market finishes, they're going to remain loyal, very, very grateful that they had a base, which is called gold. And that's why we're saying to you, allocate 20% of your portfolio to gold. Because when everything comes crashing, when everything comes sinking, they are going to find only one final place to sink on. Their bed, the final bed, the spring of that bed, honestly, is gold. And that's why everyone who has been lucky to have gold, when the crash finishes, they are able to bring out their gold and rebuild again. If you have cash and cash becomes worthless, like it was in Zimbabwe, you'll be very sorry that you kept cash. If you kept cash the way it was kept in Zimbabwe, and the cash was used to buy bond, and you had the bond of the government of Zimbabwe, and the Zimbabwean economy crashed, if you didn't have gold, you'll be in deep trouble. I'm repeating it again to anyone who cares to listen. Buy gold, you'll be very grateful that you do, and that you'll be extremely thankful to God that God allowed you to listen to this message. And I again need to thank the minister. At the next workshop, because you are not supposed to speak last, we would arrange so that the minister speaks before all of us at a point and an opportune time. Amina, please, I would call you to arrange that, and Emmanuel will get in touch to make sure that that is well coordinated. Etty, once again, thank you very much for letting us know you are here, and thank the minister also.
Thank you so much, sir.
Most grateful.
Thank you so much, sir. Thank you so much, sir. On behalf of the Honorable Minister, I'd like to take a moment to just commend Dukia Gold for convening this timely and very insightful webinar. It was very technical. You really went into the pricing fundamentals, which was really, really amazing to hear. As you all know, gold remains a strategic mineral for Nigeria's economic diversification, also for its value addition, and most importantly, for its forex growth. As such, platforms like this are actually very critical for deepening stakeholder and understanding and promoting responsible mining practices. Mr. Fabemi, no be today. You've been here. We know all the efforts that you've made, even in prior administrations, which I've actually been privy to. So I'm happy to see that you're still active in this sector. The Honorable Minister does send his warm regards from Turkey. Unfortunately, he's on a state visit and his days are extremely packed. He would have loved to be here. And it's just very important to reiterate that The ministry, under the leadership of Dr. Dele Alake, welcomes constructive private sector engagement such as this, and we also remain committed to creating an enabling environment that supports transparency, sustainability, and investment across the gold value chain. Thank you so much, sir, for making the time and also giving me the opportunity to represent my HM. We appreciate you, sir.
This powerful woman in mining, I say thank you very much. And indeed,
Thank you, sir.
grateful
Thank
for your
you,
kind
sir.
words. We're all working together to make Nigeria a better place. And by the grace of God, like we did say to you, we'll coordinate with you so that the launching of the Dukia mobile app for sales of trading of gold is done. Our so-called involvement in the development of a 40,000 ton per day polymetallic production is on course. Again, will come to the minister to ensure that we do give him the privilege of doing quite a bit regarding the launching and all the rest of them around it. But I thank you all for creating the right enabling environments for private sector investment. Indeed, Nigeria is a mining destination waiting to unleash itself. And by the grace of God, your good efforts and your service to the nation will truly make you a member of the Order of Niger. Thank you,
Amen.
May God bless
Thank
this
you.
great country. Thank you, sir. Thank you, ma'am. And thank you, Honorable
sir.
Minister.
Bye-bye.
Bye.
Thank you.
Okay.
Emmanuel.
All right. Thank you so much, Ma, for actually representing the Honorable Minister. And to just wrap our final presentation to a close, I'll just invite the Managing Director to just say a few words before we finally conclude. I think she gave the welcome address, so it's just right that she gives the concluding remarks. Just say a few words before we bring this presentation to a halt. Hello, Ma, you have the floor.
Okay, thank you, Emmanuel and Chairman, and thank you, Madam Amira, for representing the Honorable Minister. We appreciate this. And I want to say thank you to a big member of our team from the background, Mr. Munir Zaman. He is one of the biggest traders of gold in Canada. Thank you for joining, sir. We appreciate. Thank you, everyone, for staying through with us. And I believe that it's been very insightful and useful for all of us. So I would like to wish us a very wonderful year, 2026, as we continue to take our investment decisions, and also as we live through all the turbulent times. I pray that we would only get the better for it. I will not be consumed by any of this. Thank you, everyone. I can just say that gold is having a moment, and it's a moment that has been building for years. And what we can do is just to make the best of it. So I wish us all well in year 2026. Thank you, everyone, and have a wonderful day ahead. Enjoy the rest of your day.
Thank you very much, man. Thank you very much for that closing remarks. Thank you, everyone, for tuning in.
Again, it's important that I just interject a bit. Munil, it's nice that we hear your voice. Munil joined Dukia many years ago as a founding investor. Like everyone knows, there's the Royal Canadian Mint, but he represents one of the largest distributors of gold around the world, whether it's in North America or in the Middle East, including Nigeria. And it's nice that we let him just say good morning. You're awake in a very cold region, so it's good that we hear your voice very briefly. Munir. Dr. Zaman.
You're
Please
muted.
unmute.
All right. Thank you for having me, Mr. Tunde, and all the teams, especially the young lady who is presenting the opening ceremony and closing ceremony. I appreciate that and wonderful presentation. I conclude of this presentation. It is not a very small or simple, I would count. It is a call for the whole citizen of Nigeria to wake up, to invest their saved, hard-earned family money into the gold. I would say everybody into this meeting should consider carefully for their hard-earned money to save into the gold and silver. Yes, every moment are counting, every millisecond are moving very fast. So I would um, appreciate again Mr. Tunde to giving this wake-up notice for the nation of Nigeria. As well, I would say it is not only for the nation of Nigeria, it is for the old nation should follow the train of Mr. Tunde, what he has discussed today. Thank you, Mr. Tunde, to having me in this meeting. I appreciate.
Thank you again, Munu. You are a doyen of the industry. Everywhere you show up, LBMA recognizes you. Some of the largest gold refinery in the world recognize you. It's a joy to have you in our midst. Everybody will say, who is that? Only the few who understand when we see your gold lapel understand that indeed you move volume. You are also a good market maker for us. And many people ask, how much gold can we sell? You can sell as much gold as you buy. But the best way to sell gold is not to buy gold from other countries, is to generate the gold we want to sell in Nigeria, by Nigeria, in Nigeria for Nigerians. Munil, I want to thank you for training us. I want to thank you for helping us grow the trade. I want to thank you very, very much also for believing in Africa, especially Nigeria. And we look forward to working with you as we continue to entrench gold as part of the family loom, as part of the family asset, as part of the family value, and more importantly, as an asset class that not women wear on their earrings or carry in their bangle, but men, gentlemen, banks, institutions, industry, savings, including so-called IRAs, which is retirement accounts, can also boast of having gold in their portfolio. Again, thank you for your kind words, and thank you for, again, reiterating for Nigerian Nigerians, Africans generally, please buy gold. You'll be glad you did. Please invest in gold, not as a transactionary asset. Invest in gold because, I repeat, when all crashes, I pray not, if you have gold, at least you have something to start again. If you meet anyone who has read the Israeli history, when they had to leave Germany in a hurry, the only thing they had when they arrived as refugees was the gold they took on themselves, sometimes taking out a healthy tooth to replace it with gold so that they could have something to pull out, sell, and start all over again. May God not allow that to happen to us. But if anybody also goes back to a very recent history, when America invaded a place in the East and they bombed them to whatever, what saved that country was anyone who escaped with gold in his pocket and gold in his so-called hidden places and was able to pull it out and sell. The history of gold saving nations, saving people, making sure that you are able to restart all over again is known. I will tell you a very bad one. Seeing people whose houses got burnt to ashes, or because their mom had a lot of gold, when the so-called fire stopped, all the woman said is, go to this place, bring out whatever you find there. The gold melted a bit, but gold is still gold. When they sold that gold, they rebuilt that house. So therefore, whatever you do, please buy gold. God bless you very, very much once again. Thank you, my great partner, Zaman, and thank you, MD. I return the microphone to you, Emmanuel. Thank you for a very well done presentation, and I pray that you can circulate it to everyone who attended as quickly as you can. God bless us till we meet again. We would meet in March anyway at PDAC, Zaman. So over to you. Bye-bye.
Thank you very much. Have a wonderful day. Bye for now.
Thank you. Bye, everyone.
All right, thank you, everyone. We'll see you in February, where we conclude, when we begin another presentation on the last Thursday of February. Thank you so much for joining. We'll definitely circulate the replays, but we thank you for making our time to actually be here. It's bye for now. Thank you.
Paul, thank you for starting. I'm very grateful. It's worked exactly the way we wanted it to. God bless you all. Bye-bye, everyone.